Hey folks, Dan Frio here, the Mortgage Update. Today is August 25th, 2020. So what's going on today with rates? You're not going to like it. You're not going to like it. Rates are going up. If you went from a pig to a hog, you're getting slaughtered. The last 2 days we saw a major move with rates. If you're one of our clients, don't worry. You probably have a 99.9% chance you're locked in. So that is the good news. More good news is there was a fee that Fannie Mae and Freddie Mac was coming out with that was supposed to take effect September 1st. That is now getting postponed until December. So that's some good news in the market. Other great news is home sales, home values, building, and everything is just booming. So that's some positive news. And again, guys, the rates are still low. I mean, they're still low. You're never going to time it perfectly. And like I always say, pigs get fat, hogs get slaughtered. If you're at 4.5 and you can get 2.99, take it. Depends on how much money you're paying though. Most cases, when we're refinancing your loan, you might, in kind of the worst case scenario, you might spend like $2,500 or $3,000. That's in states that have really high title fees or legal fees. But in most cases, your costs are maybe $1,000. I always tell you too, if rates drop more than 0.5% from when we close you, I'll refinance you for free. And I'd be more than happy to send you that in writing or whatever you need from me. So that being said, let's see what happened today in the markets. So let's get on it. MBSs were down 11, okay? So like I always say, red, bad. What does red mean? Well, the price of the bonds are going down, pushing up yields. So we'd like when this number right here is green. Why green? That's good. It means rates are coming down. It means the prices of bonds are going up, thus bringing down the yields. So how this works is as the price of a bond goes up, the yields or the rate of return goes down, meaning mortgage rates come down. So that's the easiest way for me to explain mortgage rates. So 11 points is enough to move the market. So let's see what the trends are right now. And I watched something earlier today, or last night actually, and somebody's like, who cares what yesterday did? Or, at the end of the day, somebody tells you what happened with mortgage rates or whatever. Guys, all this stuff is cyclical. There's trends, there's patterns, there's a whole bunch of things involved. What I try to do is say, okay, here's what happened today. Here's the economic news that came out, that's coming out, that we're going to see, and then I try to give you my judgment of would I lock, would I float you, what do I see is going to happen in the next day, week, months, years, and so forth. So what we're watching here is this is what's going on with mortgage-backed securities. This is the price. So as we said before, as the price goes up, yields or mortgage rates come down. One up, that's so. Right in here, we had, I call it a head and shoulders pattern that we hit. And it kind of caused caution on my side because a lot of things, we're basically, the worst news is out there. We have the pandemic. The country shut down. People were dying. All this stuff is bad, 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 bad. That's why we went from, let's go back on a little bit longer basis. That's why we went from here and we're here today, okay? Again, as this chart goes up, rates come down. That is that's a major move right there. Look at this. This was nuts. And then we rebound quickly. So if you closed in here, locked in here, you need to call me and get refinanced. But over the past year, rates are probably at least in most cases, if not all, at least 1% lower than where you would have been last year at this time. So if you bought your house last year or refinanced last year, reach out. Let's see what we can do for you. Maybe even run you through a no-cost comparison, meaning there would be no cost to close on your loan. Some states have really hefty legal costs based on your city, county, and state. Others are really cheap. For example, the state of Illinois, your legal fees are about $800. Flip side of that is Texas. Your legal fees are about $2,000. Same with Florida. They're kind of in between those areas. But our Florida and Texas loans are much bigger. So, 0.5% or a full point different or lower in rate can really save you a lot of money. All right. So let's condense this to the last quarter. So here's what we're seeing. So what I was following is here's some floors or ceilings and floors that we follow. And if you go back to my videos, back in this area here, I was saying, okay, we need the lock, because some good news is starting to come back into the markets. A lot of states are opening up. The employment numbers were getting a little bit better. The government, they were sending out stimulus checks and packages and so forth. And they did, there was a revision from the 600 to I think the 400 now in your weekly unemployment claims and so forth. And then the forbearance issue came in. So banks are trying to work with the homeowners to keep everything good there with forbearances. The stock market is doing really well. The housing markets are doing fantastic. We have all the bad news kind of behind us. Unless Corona really hits hard again, like hard, the media is kind of a big component of this. I'm going to stop there because I don't want to get any hate mail and texts and so forth in regards to that. But basically what I'm saying is the world was at kind of an end, and now we're starting to dig out of that hole. All right. So if you start seeing, a cure for Corona, you're going to see this, stock market just skyrocket. What's going to happen there, though, is the bond market's going to take a hit, and you're going to see rates jump. Everybody keeps saying, well, the Fed says rates are going to be low for 2-3 years. Tell you what, guys, it's like the weathermen. They don't even know what tomorrow's going to bring. If the economy really kicks in and everything we have a V-shaped recovery, 6 months, we could see, mortgage rates back in 4.5% rates. If you see a robust recovery. Why? Well, the Fed is printing money like it's water. And they're just throwing it out there. Eventually, all that money has to be paid back. That's going to cause inflation, and that's going to cause some major headaches down the road. So what I'm getting at is, pigs get fat, hogs get slaughtered. If you can get a better rate today, do so. Because based on all these trends, I saw rates that should have been between these areas right here and here, right here, that's the 25-day moving average, and right here, which is the 50-day moving average, and where are we? Right there. Okay, so go back. If you don't believe me, go back to my videos through here, and I said, there's a great chance of us kind of being in this area right here, where the 25-day moving average was. And then once we kind of broke that threshold, the next one is to be in the middle of the road of the 25 and 50-day moving averages. And then the next one is to hit the 50-day moving average, and that's another drop here. All right, so basically in a nutshell, what I'm saying is pigs get fat, hogs get slaughtered. Don't look a gift horse in the mouth, guys. Rates, if in the best case scenario, I see them being steady. I don't really see us going and testing any historical lows again. I hope I'm wrong for some people that can cash in on much lower rates. But the good news is behind this, if you start seeing rates come up, then the economy is starting to recover in a good way. Okay, so that's that. So now let's look at the economic news that came out today. And we're getting nothing but good news. Consumer price or home prices up from 0.1 expected to 0.9. Fantastic number. Case-Shiller Home Price Index. A consensus was 3.8. We're at 3.5. So a little bit less. That was kind of I didn't see that one coming. Consumer confidence is bad. Is really bad. Is much lower than we thought. Manufacturing index was doing very well. So manufacturing is doing well. New home sales blowing the roof out. And the Treasury auction, that's what I was going to say. So what attributes to some of this stuff? Well, consumer confidence, if you watch the media, you about almost want to jump out a window. So I don't, this piece here, I take this with a grain of salt because between all the riots going on and everything else and the pandemic and the unemployment and the news, the media, the way they're going, plus it's an election year, there's nothing but just bad news. So consumer confidence is bad. But when you start looking at other figures, manufacturing indexes, good. Housing, good. Housing prices, good. We'll leave it at that. So there's a lot of good things going on, but the media just beats you upside the head, just bad news after bad news after bad news. Loan level price adjustments. This was basically what Fannie Mae and Freddie Mac did. They came in a couple weeks ago and they said, you know what, for anybody refinancing their mortgage, we're going to charge them a 0.5 point. So they charge us as the lenders because the pass-through goes to Fannie Mae and Freddie Mac. Let me explain this. Fannie Mae and Freddie Mac basically approve, or they're the mortgage company for basically everybody. Just think of it that way. When people came out and said, Fannie Mae and Freddie Mac, they're bad. Let's get rid of them. Be honest with you, if it wasn't for them, in the last 8 years, there probably would be no mortgages, or very slight amount of mortgages. So what they do is they're the entity up here with all the cash. Look at it this way. Then there's the lenders. They could be the bank, company like ourselves or whomever. Then there's the consumer. You're looking for a mortgage. So you come to us, okay? We then run your loan through Fannie Mae and Freddie Mac, their guidelines and their online computer system to get your loan approved, all right? Then we issue you an approval. You then give us all the documentation that Fannie Mae and Freddie Mac asked to clear your loan. So we get those from you, we clear it, we close the loan, we fund it. Ultimately, then Fannie and Freddie Mac have put up the money to front all of this stuff. I'm trying to generalize this the most I can. So they're basically the person with the gold makes the rules. So they have all the gold. They came out and said anybody that's going to refinance starting September 1st and going forward, we're going to charge them a 0.5 point. Now you can pay the 0.5 point, or it could be built into your rate. Okay, so a 0.5 point is 0.5% of your loan amount. So if you got a loan amount of $100,000, a 0.5 point is $500. Okay, that's how that works. So they came out. Do I agree with what they're doing? No. All they're doing is saying there's so many people refinancing and everybody's making money on the banking side. We're the ones, sitting here with the money, helping everybody make money and helping homeowners, helping lenders and everything. We're going to take a little more profit for ourselves. So they're charging a 0.5 point. I disagree with it, but the person with the gold makes the rules. So that's basically how all that works. So the headlines came out today is they're going to delay that until December 1st. So that's what's happening there. So hope you like this video. I'm going to end it there. I posted 2 other videos today. One of the videos that I came out with was the housing bubble. And you got to watch that to see what I predict on the housing front on values. And do I think there's a bubble ready to burst? So that's it for today with mortgage rates. My name is Dan Frio. If you like what you saw, and I'm sorry I rambled a little bit. I tried to do mortgage rates specifically, but I wanted to go over some different things with you guys today. So hopefully you like what you saw. If you did, please give me a thumbs up. I'd appreciate it if you down below hit the subscribe button. It helps me, helps my algorithms, helps me reach out to more and more people. Hit the little bell so every time I do post a video, you can get an alert to say here's what the video is. If it's something that you think would be informative to you, please watch it. If not, pass along and just watch the ones that you think are informative. If you'd like to reach out to me personally, the best way to do that is go to, and I'll walk you through the website right here. On the URL, all you have to do is put in therateupdate.com. It'll pop up right here, and it'll give you my phone number right down in here. It's 844-775-LOAN. That's 844-775-5626. Or shoot me an email. My email address is, my name is Dan Frio. So my email address is D for Dan, Frio, which is Frio at preferredrate.com. Here's what I ask a lot of people to do. So that's the best way to get me. Is if you're in the process right now of trying to get a mortgage and you got a quote, as a lender, we have to issue you one of two things. We have to issue you a loan estimate or a fee worksheet, one of the two. All I ask you to do is send that to me. Let me at least give you a second opinion. I can say, okay, they're giving you $299 with $5,000 in fees. How about if I give you $2.875 with $800 in fees? Most cases, and I get about 1, 2, 3, 4, 5. Today was a slow day. I got 6 so far today, and I think I beat everybody on all of those, either with rate, fees. And when I say I beat them on rate, I'm not saying I beat them on rate and then I jacked the heck out of the fees. No. Let's say the fees were equal, I beat them on rate. Let's say my rate was equal and I beat them on fees. Or I beat them in both areas. So you have nothing to lose. Just email me a copy of the loan estimate or the fee sheet. Give me an idea what your credit scores are. Here's the best way. If you know your credit scores, you get a Discover account. You have any other accounts to say, here's your free credit score. At least let me know. Give me an idea what your credit score is. The components that I need to figure out your rate is your home value, the loan amount, your credit score. Those are the things I need. So if you send me the fee worksheet or the loan estimate, it'll give me your house value, or at least your address, and I can look it up and figure out what the value is. The loan amount, it's already on there. And then it'll give me the rate and the fees and all the other stuff. The missing item is what your score is. So I have a sponsor of the show. It's Credit Scores. It's plural, creditscoresandmore.com. You can go there and do a whole slew of things. Step 1 is gets a free credit score. It is free. Doesn't ask for a credit card. Doesn't ask for anything. It might ask you to upgrade this or this. Don't do anything. Just get the free score and then send me and say, hey, Dan, that step 1 free score was a 784. Perfect. If you really want to know what your credit score is and you're like, I got to know what my credit score is, I want to know, or you want to monitor your credit, you can do step 2 and complete that. It's a fantastic system. And that's where you get your true credit scores and your credit report, the ones that I would use. And you get credit protection and the whole ball of wax. So that's number 2. If you need help, if you have collections, judgments, bankruptcies, old information on there that's just too much for you to handle and you need some credit counseling or credit assistance, click step 3. It's a fantastic system. I use it myself to monitor my credit and do a bunch of things. So that's it for today. Thanks for listening. Didn't mean to make this an infomercial, but if I could be of any help to you, please reach out. I'd love to hear from you. And I'll see you tomorrow, God willing, same time, same place. See you then. Bye-bye.